Hi there, this is Chris from MoneyHub, and this video looks at investing in dividend shares. So many people have probably evaluated their share portfolios over the last few months and seen in the last couple of years share prices going up and down. What does that mean for them? Do they want to diversify? Some people have asked us, well, what about dividend shares? Should we just sell up and go into those because interest rates have been low, but these companies have been paying out high? So we wanted to put together a guide which explains exactly what dividend shares are, why they're not always a sure bet. There are some pros, but there certainly are some cons as well. Then basically looking at the current dividend shares available and making sure that you understand what they actually mean, because it's very easy to say something is going to pay 10% based on the last payment of the dividend. But if something's happened to that company, and the share price has dropped a lot, then the dividend looks really high, but it may not actually pay out in the subsequent years or the subsequent 6 months, because if a share price drops, usually that means there's been some profitability issues or something with revenue. So before we get into all of that, let's just go through the guidance, as a summary. So we've just said it's, dividends can be a wonderful passive source of income. They're the kind of thing where you get a payment every 6 months or every year. It goes straight into your bank account, and it's really a good feeling. It's a situation of, oh, that's my money working for me, because this $80, this $50 straight into my bank account. It's been taxed. What a nice feeling. So they've been around since sort of the dawn of share markets, dividend shares, and they're known for their consistent, stable returns. But at the same time, as I've said before, they're not without their risks. So a falling share price, that's really, really bad for a dividend share, because not only, are you going to not perhaps get your dividend, but the original amount that you put in is now worth a lot less. So it's not like a term deposit where you can put in some money and sit it there for 90 days or 1 year, 2 years and get a fixed rate of return, which will be paid out. Dividend shares can drop in price, which takes your investment with you. So then, what we're telling people to do really is just to make sure they do proper research. And this is why I'm going to sort of go through some of the charts just to explain exactly what they mean. So I've written some comments here around what I think of dividend shares, and it really is just, what to be careful for. Make sure you don't rush into it just because you see a high number and think, wow, I can get a 12% dividend. Let's go all in on this share. But then you find out that, this company is not performing very well. So we explain what a dividend share is and also how a dividend yield works and really what to watch out for there. And, things that have high dividends really, tend to be sometimes like good companies, but at the same time, companies that have struggled and the share price has dropped, hence the dividends overstated. So it's very important just to read through that and just understand how dividend yields work. Then we look at the pros and cons. So dividends shares can be lower risk because often they're well-established companies. They're like power generators or big retailers, things like the warehouse that's historically been a dividend payer. Things like Hallensteins Glassen, those kind of companies, property companies, they obviously charge rents, so they can pay out dividends. But it's just kind of, you need to be sort of familiar with what you're looking for and know that they are lower risk, but at the same time they still have risk. So they are, more stable. They're not, dividend shares aren't going to go, it's not going to be like a Tesla or something like an Amazon, which goes from say $1 to $1,000. They are slow achievers, quiet achievers. And so that's just really important to know that it's very rare for a dividend share to get so, jump up so significantly. They will, they are designed to still go up over time. But there isn't that kind of growth because they're not focused more on, they're focused more on being a stable provider, rather than being a growth company with huge revenues being grown, new sales teams being added, new products being launched, things like that. And then, as we say, they provide a very reliable income stream when the times are good. But as you can see from the cons, there are some issues there. So as I said, they're not going to grow as much as growth shares overall. And then also, there's a problem with the disconnect. So just because you buy a dividend share, it actually doesn't give you the right to get a dividend. A company can change its its dividend policy at any time, what it sets to be the dividend. And they'll cut them. It'll be the first thing they cut if they're struggling. So if something's had a bad year on revenue and it's going to make less profit, it's like, okay, let's just conserve cash, let's just cut the dividend. And it may be a situation where the company was previously profitable, paying lots of dividends, and then wants to reinvest back in, hopefully to grow it in the future. At the same time, companies may become loss-making, and so there'll certainly be no dividend there. So that's really just what to watch out for. And then it's also the high dividend yield trap. So this is where you see a whole bunch of companies that look as though they have very high dividends, but actually, they don't. And if you do buy them, you might see the share price drop some more, or you might see no dividend paid at all. You might see both. So let's just go through that right now. When we come down to where we've listed here in no particular order or no kind of investment qualification here, it's just we've linked to some on from a list which you might know. And the same with New Zealand. These are companies that people kind of know, and these are what the dividend yields are. But there's certainly no investment advice here. These are just examples. Some of many to consider as part of your due diligence when you look for dividend shares. So if I just load up the New Zealand, so this is from Simply Wall Street, very helpful Australian-based site, and they're sort of telling us here what the dividend yield is. This is based on the current share price, the last share price. So what you need to know is that while these look very high, there is no guarantee that will be, what you get. So if you invested right now into my food bag at 79 cents, this was taken on the 4th of August, 2022, then, we're not sure if they're going to pay, the dividend that they paid last time, whether that was a few months ago or last year, what's that, because the share price keeps dropping. So that would suggest that, there's revenue challenges, there's profitability challenges. So it's highly unlikely that, these type of companies where the share prices drop will keep a consistent dividend. It's not, I'm not saying it won't happen. It's just something that you need to be aware of. So where you see not much share price movement and kind of a bit of safety, then fine, you may see that dividend continue. But when you are seeing big prices, I'll just get rid of that. So with Simply Wall Street, it's very unhelpful that you have to subscribe. So just be cautious of that. You might want to, it's free, but that'll give you more information there. So things like, there's a finance company, it's got that dividend, but of course the share price has dropped a lot. And then, some retailers, of course, the markets are always moving around, so that may seem more stable. What it really means is that dividend shares aren't things that you can just, go through, sort by dividend yield, and then choose the top 5 and invest in them. That's totally the wrong way to do it. You've got to look at every company like you should do with anything that you invest in. Make sure you understand it. Make sure you understand what the prospects are and take a view on them. Do you think that this company will make profits in the next 6 months, the next 12 months? What's in the news about them? What do you know about, their overall revenue growth? What's happening? And that's how you can pick good ones with dividend shares, good winners, long-term dividend payers. But at the same time, if you don't do the research, you just look at the number of the dividend yield, then there is a big risk that you get into a situation where there's just not, there's not going to be the dividends paid and your share price drops. So that's very much worth knowing. And then we've also got some frequently asked questions, which we continue to add to. So that's it for dividend shares. If you do have any questions, let us know in the comments down below. We've linked to the MoneyHub guide. We've linked to Simply Wall Street and a few other useful guides as well. Something from Simply Alpha, which talks about when dividend shares go wrong and what you need to know. That has a US